Hello there. My name is Pavel Konecny. I'm the Chief Investment Officer at TriStar Trust. And with me today, I have Kyle Chapple out of his kitchen. Uh, Kyle is one of the senior portfolio managers on the investment team at TriStar. And Kyle's responsibility, or one of Kyle's many responsibilities, is to monitoring all of our investments in the international equities. So Kyle, tell us, why is it important to invest or consider investing in international equities?
Well, it's a good to invest in international equities because I think we get kind of focused on just the U.S. We live in the U.S., so that's kind of our main realm of living in the U.S. and following the U.S. But we got to remember the world's made up of 195 different countries. So the U.S. is one of 195. That leaves 194 other opportunities of investments. And of that, the U.S. makes up about 24% of the global GDP in one country, but the 194 other countries make up 76% of global GDP. Therefore, that leaves plenty of opportunities for investment around the world.
All right. How do international equities, from a correlation standpoint, how do they behave as it relates to domestic, U.S.-based equities?
Well, U.S. equities and domestic equities can obviously work in tandem, but sometimes they can work not in tandem, given the economic circumstances. So they can act as a diversifier for your portfolio. Again, there's many global companies, money is constantly moving. Goods and services are constantly being bought and sold around the globe, just within the US and outside the US. And with things like the internet and technology, we're so connected now that kind of like the old Wall Street movie, money never sleeps.
So tell us about market cap. When you take a look at international equities as a percentage of the global market cap versus domestic equities.
Well, if we look at the MSCI Equity Index, the US makes up about 58% of that, but the rest of the world is 42% of that. So again, there's still 42% of opportunity left on the table to invest in solid companies around the world that make money.
All right. Is there anything in particular that you like in the international equity space?
Well, in particular, of course, the last 10 years or so, we've seen growth has been the dominant factor in investing. Growth versus, value. And what we've seen is, in this pandemic, is, we've started to work our way out of it, not only as the US, but as a global economy. Value tends to lead the way out of these, economic downturns, which the likes we haven't seen a global pandemic in 100 years. So a little bit different economic downturn and recovery, but usually international value historically has led the way out of these downturns over growth. And we've started to see that turn the end of fourth quarter of 2020 into the first quarter of 2021. So it looks like history may be repeating itself.
Is there any interesting numbers or data points as far as whether it's valuation, dividend yield, or anything like that in that particular space? You can share with us.
So overall, the MSCI US index is trading at about 23 times forward earnings right now. Since the US has bounced back so quickly, is that a maintainable, how much can we maintain that going forward as we continue to recover? At some point, you're going to kind of recover and then hit a peak and kind of level off. But if we look at the MSCI Equity X US, it's trading at 17 times forward earnings, and the MSCI Emerging Markets Index is trading at 15 times forward earnings. So again, there's room to run as the global economy continues to reopen, vaccinations get rolled out, people feel more comfortable, getting back to normal. And so again, we see opportunity there in the international markets. And just another point of reference, as far as a historical discount on a price to cash earnings discount, international is trading at about a 42% discount compared to US right now.
Oh, wow. So certainly no pun intended, there's some value in the international large cap value.
Yes.
All right. Well, thank you, Kyle.